Good morning, everybody. My name is Surbhi Vaidya, and I am a project management associate at Opportunity International EduFinance. I am going to be hosting today's webinar as part of our contribution to the global conversation around financial inclusion. Uh, Today, we are going to be discussing how financing the affordable private school sector leads to sustainable community development in line with SDG 4's goal of quality education for all. So, before we begin, I'm going to just point out a few things to all attendees. All participants are currently on mute to minimize any disturbance during the session. We will be encouraging attendees to participate in a quiz during the session. So, all attendees who wish to do so should use the raise hands icon. You'll see it at the bottom of your screens when we conduct the quiz. We will be taking questions at the end of the session. So anybody who wishes to submit any question can do so using the Q&A button at the bottom of the screen. We have kept enough time at the end of the session to address all questions. Also, please note that today's webinar is being recorded and we will share it along with the deck on our website later today. So, as we all know, school entrepreneurs are independent business owners and they play a vital role in community development. By operating a local school, they can make investments that not only grow their school, but also create an enabling learning environment. This benefits the entire community, whether it is by creating jobs, generating demand for local businesses, providing a space for networking opportunities, or through stronger community cohesion. However, more often than not, we see that school entrepreneurs need access to loans that are tailored around their school's termly operating model. Globally, we've estimated that the demand for finance from affordable private schools and parents is estimated to be at least $24 billion. So, before we get started today, I'm going to take a couple of minutes to introduce everybody on the call to our panelists. Joining us from Uganda is Alex Ahabwe, the Education Finance Manager at Opportunity Bank. Alex has worked with Opportunity Bank for over 5 years, starting first as an SME officer, where he built a strong EduFinance portfolio at his branch. In his current role as the EduFinance Manager, Alex oversees Opportunity Bank's portfolio of nearly 300 active school improvement loans disbursed to local school entrepreneurs. Alex is also a financial literacy trainer in Uganda and is passionate about the opportunities to invest in education in his home country. Along with Alex, joining us on our panel is Nwoke, Founding Managing Director and Chief Executive Officer at Hasal Microfinance Bank in Nigeria. Rogers brings along over 2 decades of experience in banking, covering both investment and retail banking, as well as microfinance. Currently, Rogers also serves as the president of the National Association of Microfinance Banks in Nigeria, the apex body overseeing all microfinance banks, which has over 900 members operating across the country. We also have on the panel Kamran Azim, Chief Executive Officer at Taleem Finance Company. So, Taleem is a non-banking finance company set up to fund only private schools in Pakistan, the first of its kind to date. Kamran has over 25 years of multi-sectoral experience. In his previous role as the Chief Operating Officer at Cash Foundation, Kamran oversaw the country-level business activities in a network of over 300 branches spread across Pakistan. Kamran is passionate about the development sector and has dedicated the last decade and a half in working with marginalized communities, including low-cost private schools, providing both financial and non-financial services. Last but not the least, I'm going to introduce my colleague, Scott Sheridan, Director of Operations at Opportunity International EduFinance. Scott has worked with Opportunity for over 5 years. In his current role, Scott is responsible for operations as well as business intelligence for EduFinance's global footprint. Scott also oversees development and implementation of a variety of analytical tools. Scott is motivated to leverage big data and business intelligence tools to unlock capital for the affordable private school sector and ensure that data analysis is fully integrated into market-based solutions which increase access to education. Moving on, for those of us who are not familiar with the education finance landscape, Scott is briefly going to take us through the landscape for affordable private schools worldwide. His presentation will cover some of the challenges that the sector faces, and apart from that, shed some light on what Opportunity EduFinance is currently doing to address these challenges. The way the flow of the webinar is organized is, after Scott's presentation, we are going to proceed with a few questions for our panelists today. After that, we will be opening up the floor to take a few questions from the audience. As I mentioned at the beginning of the session, any questions you might have, you can submit in the Q&A box at the bottom of the screen. My colleague, Carrie DeSelm, who's also on the call, is going to be managing the queue, and we will try our best to address all questions given the time that we have. So without further ado, I'm going to hand it over to Scott.
Hi, everyone. Thanks very much for joining us today on this webinar. At Opportunity EduFinance, we spend a lot of time working with school leaders and financial institutions that lend to schools, but we really want to know how well we know the state of the education sector today. So we thought that it would be a good idea to start off our session today with a quick quiz. This quiz will give us a bit of an idea around the state of play around access issues, quality issues, and a solution and employment opportunities for youth unemployment today. So the first question is, and please raise your hand when I ask out or when I read out one of the responses. The first question is, in the year 2000, 378 million school-age children were out of school. Today, that number is closest to, is it A, 423 million? Is it B, 382 million? Or is it C, 258 million? The correct answer is C, 258 million, and it looks like we got a good show of hands for that answer. So question number 2, what percentage of school-age kids are currently out of school? Is it A, 9%, B, 18%, or C, 36%? The answer is B, 18%. Question number 3, worldwide, what more than 1 in blank out-of-school kids will never enter a classroom? Is the answer A, 5, B, 7, or C, 10? The correct answer is A, 5. Out of 100, one out of 5 out-of-school children will never enter a classroom. Question number 4. 14% of kids in Europe and North America are not reading proficiently. What percentage of school-age kids worldwide are not achieving minimum proficiency levels in reading today? Is the answer A, 18%, B, 38%, or C, 58%? I see a big show of hands coming up for C, 58%. 58% of kids worldwide are not meeting minimum proficiency in reading, and the number is a staggering 88% and 81% in sub-Saharan Africa and South Asia, respectively. And our final question today is question number 5. Parents in Finland, known for having one of the world's best education systems on average, spend 7% of their income on education. What percentage do parents in Ethiopia and Ghana spend respectively? Is it A, 2 and 1%, or B, 8% each, or C, 13 and 10% each? So a lot of show of hands for number C, 13 and 10% each. So it's not a question of commitment about on behalf of the parents valuing their education. It's really a matter of means. So what all have we learned from this quiz, actually? We've learned that we've made good progress in reducing the number of out-of-school kids since 2000. However, so many kids still remain out of school, especially in South Asia and Sub-Saharan Africa. While girls are less likely to go to school than boys, the gap is narrowing quite substantially over the recent past. And despite access to education becoming more common, post-graduation formal employment remains a problem. This challenge is most pronounced in Sub-Saharan Africa and South and West and Central Asia. But the good news is that we are using financial inclusion to help youth take control of their finances. Youth are more likely than adults. This is the wrong slide. So our data team actually spends, I'm just going to move on, but our data team spends a lot of time actually gathering data from our partner financial institutions, schools, and third parties to measure our impact. Given today's theme, we've put together a few charts that highlight how loans to school entrepreneurs go to benefit the community, who is impacted, and how it is being scaled across our markets. First, we consider a single loan. And I'm going to show you a video here that highlights the data. First, we consider the single loan, which on average, our studies have shown lead to a 22% increase in enrollment. They've also shown that a single loan increases 4 new jobs for the school, 2 new community jobs, and 2 short-term jobs. This chart right here shows the impact of one loan in Uganda. If we move on, our financial partners are actually making about 500 of these loans per month. Taking that globally and over time, we actually see that these loans by our partners have now created over 650,000 new seats for jobs, 47,000 school jobs, 97,000 short-term jobs, and 82,000 community jobs. The next part shows how quickly this is accelerated over time, as we have gained more and more partners throughout the time. The network effect of the community of these loans is great. They act as a catalyst to greater investment in the community, more students attending school, job creation, economic impact, and ultimately better learning outcomes. Finally, we've also put our interactive charts to the test to highlight how quickly private enrollment is growing in low and middle income countries. One of the interesting points that this slide highlights is how Nigeria has grown so dramatically, going from third place to first place in terms of the total number of children in private education by 2019. So how actually over time is the private enrollment changing in the markets where we operate? This chart shows that actually an astonishing 45% of kids in South Asia are enrolled in private schools, and the figures are rising steadily for Africa as well. In early 2019, we published a report that combined third-party data with our in-house knowledge of the sector, and we sized the overall affordable private school market. Our report conservatively estimates that there are at least 1.5 million private schools in low and middle-income countries. The majority of this is in South Asia, with over 800,000 schools. Africa is growing the fastest and still has at least 127,000 private schools, because this data does not account for unregistered schools. In loan terms, this amounts to a conservative estimate of $24 billion in market potential just to meet standard-sized investment projects such as building new classrooms. As previously, the market is majorly located in South Asia, but a very fast-growing market exists in Africa. Importantly, it doesn't seem that the latent demand this doesn't include the latent demand from the 258 million out-of-school children that was mentioned previously. And as was previously mentioned, there's still huge pockets of children that are out of school, and with governments lacking capacity to invest, this leaves a lot of work for the private sector to be done. So why hasn't this already been addressed? Our work has found that there are significant barriers to lending in the affordable school sector. First, the market potential is not well understood by financial institutions. Second, schools don't fit the profile of a standard SME loan. So many financial institutions are not flexible enough in their product design to create a product for them. Loan officers can also be poorly equipped to lend to a school. Also, financial institutions think that these schools are risky because of the differences that they have from their standard SME clients. And finally, there's a simple issues of affordable funding and financial inclusion. So how does Education Finance respond to this? Education Finance works with financial institutions to provide them information on market research. We worked with them to design the terms of their product based on the market surveys that are conducted. Once the product is in place, we help them to designate a target market, and we work with the financial institutions to train their staff and train their trainers so that they can manage the product in-house. And finally, we also offer portfolio insights and credit scoring through our data platform, which enables financial institutions to track their performance on a monthly basis. This concludes my presentation, so over to Serbi.
Thank you, Scott. That was really helpful. We are now going to proceed to our panel discussion with our panelists today. I'm going to remind everybody once again that we do have time for a Q&A session at the end. So please submit any questions that you might have using the Q&A box at the bottom of your screen. So I'm going to start with Alex. Alex, thank you again for agreeing to be a part of this discussion. How are you today?
I don't know if we have viewers.
Hi, can you hear me?
Yes, I can hear you. Good afternoon.
Good afternoon. So thank you again for agreeing to be a part of this discussion. Given your experience lending to private schools and parents in Uganda, what would you say is the biggest challenge that financial institutions are facing today when it comes to understanding the unique needs of affordable private schools? And how would you say Opportunity Bank has addressed this specific issue to ensure that you guys are lending sustainably to both schools and parents?
In general, the biggest challenges in Uganda have been two. The main one, which has been registration and collateral. Very many private schools start, but they lack requirements. They lack structures, so they cannot get licensed by the ministry by the directorate or department, and yet they need financing. So that remains one of the biggest challenge, because they do not have what it takes for them to get a license or registration. They can't go to any bank to get financing. And obviously the biggest challenge, especially in Kampala, the biggest chunk of land in Uganda, especially in Kampala city, is owned by the kingdom. So very many schools lack titled lands. And how Opportunity Bank has been extremely different from other commercial banks is that it has been selling solutions. One of the solutions that we came up with was to have a memorandum of understanding with the kingdom so that we can process leasehold titles for these schools so that they can qualify for a certain amount of money, and we extend a certain duration, however much they have sales agreement, but we have an MOU or a memorandum with the kingdom. Anytime we have a trust in the kingdom that they would bring the titled land to the bank so that the school proprietors or the investors come in can qualify for a certain amount of money that they cannot qualify for in other banks because they don't have collateral. So the biggest challenge for financing has been around collateral. And on license, Opportunity Bank has created like a relationship, a strong relationship with the ministry. We really do not influence the ministry, but we work with the ministry, especially in financing. If a school needs maybe 20 instances of latrine to have a license or a registration, we follow what has been recommended by the inspector of schools, by directors of schools, and we provide a solution to that school. And in that process, we're in position or we're able to finance these schools, which other banks cannot do. They totally do not allow you, if you don't have a registration, to get a loan in any other commercial bank, or if you are not fully registered, you cannot qualify for any loan facility. But Opportunity Bank works closely with education department, with the ministry, with inspectors, with district, to make sure we serve and help these schools get financing, but again, improve the quality, especially by financing what is most recommended by inspectors of schools or departments of education.
Okay, that's amazing. Another thing that I would like to ask you is, so as Scott mentioned in his presentation earlier, schools play a range of roles in the development of your community. And you've been working with schools in your current and previous role at Opportunity Bank for a really long time. So how have you seen both that for both schools and parents, how has increased access to finance impacted the communities where Opportunity Bank is currently working?
One, with Opportunity Bank coming on board and financing education finance, the dropout has somehow reduced, especially in the schools that work with us, because we do it in a two-way. We do not only finance schools, we do not only finance school owners, but we go ahead and finance parents. We give school fees loans to parents. We believe, and most of parents in Uganda, when you check on their lists of the requirement, the first requirement is school fees, but the cash flow, the kind of business they do, and not allow them to pay the school fees. So what we do is provide a solution. We come in, give school fees loans to these parents, go ahead and pay their fees at the schools. Then there's a transformation at schools. Then there's a change in the community. When you look at the structures, schools initially would be in temporary structures. We have a lot of testimonies. Schools that we started with renting, now they own structures, in temporary structures, in timber or plywoods, but now they have structures. So by financing education, we have not only focused on education, but we've changed the community at large because the infrastructures have improved. And the community levels, when you go to the communities that which schools have worked with us or have close relationship with us, you can see there's a change in community lives. And what Opportunity Bank does different from what other banks do is we focus on the value whole process. We look at the teachers, we look at the parents, so we look at the community. So some schools recommend their parents and they come to Opportunity Bank and we finance them. Also, we go to the communities and we look at the parents who cannot afford to pay school fees, we finance them. So it has all been strengthening and improving the communities. And obviously, OI came in and helped us with a program that is called Education Quality. Education Quality, where they really teach school proprietors or school leaders on professional leadership ways. And this has helped them to develop their businesses and to be good clients on our sides, because at the end of the day, the bank gets these quality clients who pays their loans very well.
Okay, that's really good. So would you say that Opportunity Bank is sort of focused on working with the whole education ecosystem in Uganda?
Yeah, truthfully, we've worked with the whole ecosystem, as I've told you, the whole value chain, starting from the
Hmm.
suppliers of the uniform, suppliers of the food, the parents, the teachers, everyone in the community is involved in. So education finance is huge, it's bold when it comes to Opportunity Bank. The parents and the teachers are the same people who live in the same communities, and they are transforming the same communities they live in. So we've really focused on that.
Thank you so much, Alex, for giving us a brief insight into what Opportunity Bank does in Uganda. And thank you once again for agreeing to be a part of today's webinar.
Oh, thank you so much.
I'm now going to move on to our next panelist, Rogers. Rogers, welcome and thank you again for joining today's webinar.
Thank you very much. Good afternoon, everyone.
So I'm now going to focus a bit on the Nigerian market. So you know that excluding non-registered schools, there are at least 24,000 private schools in Nigeria. This amounts to, I believe, around 17% of total enrollment, and this figure is growing rapidly. And our estimates show that it's expected to reach a figure of 10 million enrollments by 2023. Nigeria is also the largest market for private education in Africa and the fifth largest low to middle income country globally. In the market research that we conducted in Nigeria, we found that financial institutions don't have a strong sense for the potential demand for education finance. This is also one of the major barriers to lending to the affordable private school sector. So, based on your experience of leading Hasal Microfinance Bank as well as heading the National Association of Microfinance Banks in Nigeria, would you say you agree with this statement? And how do you think financial institutions are beginning to address the increasing need for finance, both from affordable schools and parents, so that the increasing demand is met?
Thank you very much. Yes, those statistics are not far from the truth. The private schools have continued to increase in number in Nigeria because of the inability of the public schools to provide or improve upon the education. The standard and quality of what comes out of the private schools has continued to deteriorate. So there has been a significant shift from the public to the private sector. Yes, again, you are right, because before now, the financial institutions have not taken this as a strategic, business unit to pursue business. But I think that has begun to change over time. Many banks in Nigeria, especially the bigger commercial banks, have strategic business units that are focused on education finance. In the microfinance subsector as well, some of the bigger banks are also focusing on this area. And indeed, of recent, some banks are already beginning to partner with Opportunity International. But I can tell you that in the last couple of years, say in the last 5 years, thereabout, there's been a significant increase in interest in the private sector education services. The reason is because more and more parents are beginning to enroll their kids in this area, and the proprietors of these schools are not able to cope with the financing that is needed. Today, you are beginning to see products that are specifically tailored to education finance. You're beginning to see that more and more financial institutions are providing personal loans to parents to pay school fees, especially in periods like September, in January, in April, which are periods where school fees are paid on timely basis. It's common to see adverts and product announcements from several financial institutions asking parents to come and take loans for payment of school fees. So I think that there is a strong shift into looking at education finance in Nigeria. And it's going to continue to increase because the public schools are not taking very strong steps. The government budgets on education are not anything that can, cause a significant shift in this procedure. So I think that the private school numbers are going to continue to increase, and the enrollment in private schools will also continue to increase. What are we doing here? We are continuing to now begin to encourage financial institutions to see how they can increase access to finance by the schools in the private sector. We are also beginning to see that some of the securitization and the registration issues that where some of the problems are beginning to get addressed through product specifications. The other issue was that schools tend to divert school fees proceeds, which are meant to pay the loans. That again is being addressed through a more strict securitization process. But overall speaking, the financial institutions in Nigeria are seeing, a greater opportunities, and have seen that the need for finance in the private sector education is increasing significantly, and it is beginning to be a strong platform for competition. Different banks are coming up with different products, and many banks are setting up strategic business units to focus on education. Even at the microfinance level, I can tell you that many of the top 10 microfinance banks in Nigeria have education finance units. As a matter of fact, there is specifically an EduFinance microfinance bank that is focused purely on financing education. That is the position in Nigeria right now.
Okay, amazing. So would you say that the focus of the National Association of Microfinance Banks is also shifting increasingly towards education finance? And how is the association helping financial institutions to sort of create and increase their portfolio, or help them address various issues that they face in the market?
Okay, first, with almost 1,000 microfinance banks in the country, the first thing we've done is to try to do an assessment of microfinance banks that are interested in the education finance session. What we have found out is that even those that were not interested before, when they look around their business environment, they see schools springing up almost on yearly basis. We identified that there is a stronger knowledge gap in education finance, and so we consider that capacity building is a key requirement. And recently, with support from Opportunity International, we begin to focus on training for financial institutions in the microfinance subsector that are interested in education finance, and those who are ready to set up specific products that support education finance. The second thing we are doing at the association is to try to collaborate with owners of these private schools. Under the platform, they have a national association of proprietors of private schools. We have had some meetings to see if we can build support through a collaboration, because one key issue in the past has been that when you give loan to a school, during the time of loan repayment, school fees is paid through another bank, and then you are not able to get your money. But with this collaboration, we're trying to see if we can get a tripartite understanding between the owners and proprietors of the school, and then the Parents Teachers Association. because the payment of school fees comes from the parents. So if there is full disclosure by a school that says, look, Hasal Microfinance is giving us facility improvement or upgrade support scheme to improve the quality of the facilities that we're providing, or that Hasal Microfinance Bank is supporting the school financially. And so school fees are going to be domiciled to Hasal Microfinance Bank. If the parents are part of that agreement, then it becomes difficult to divert school fees. That's the discussion that is going on right now. And we hope that if we're able to bring parents into the product development stage for them to be part of the specific products that we are doing for the schools, then issues of default will be greatly reduced. We are also trying to provide some kind of capacity building support for schools that are, for banks that are interested in education finance by holding training sessions routinely on a zone by zone basis. There are actually 6 geopolitical zones in the organizational structure of the association. So those banks that are interested or beginning to develop education finance as strategic business will be built into our capacity building curriculum for the year. As you are aware, the National Association of Microfinance Bank is a significant shareholder in the Microfinance Learning and Development Center, which is now handling our capacity building. So this is some of the things that we are doing to ensure that the subsector gets involved in bridging the gap in education finance. And why we have to do this is because we do not see any chances that the public schools are going to improve, over time, looking at the amount of monies that are being budgeted, to the schools and all that, and looking at the rate at which the population is growing, and then the out of school children and all that. For now in the short and medium term, the solution lies in developing the private schools and giving them support to be able to cater for more students.
Okay, amazing. Thank you so much, Rogers, for giving us more insight into the Nigerian market. I am now going to move on to our final panelist for today's session, Kamran. Kamran, thank you for joining us today. I know it's pretty late in Pakistan, so we really appreciate you taking out the time to contribute to this session.
Thank you, Surabhi. Good evening, everyone from my end. It's a pleasure to be on board. Thank you.
Perfect. So we all know here that Pakistan has one of the highest market penetration of affordable private schools in the world, serving, I believe, an estimated 15 million children currently. We conducted a market research in Pakistan, and we found that schools currently face 2 key challenges. The first was lack of access to finance, and the second was poor quality of education. We've also found that many financial institutions initially perceive affordable private schools to be high-risk customers, but we know that there are several financial institutions in Pakistan currently lending to this sector with portfolio at risk over 30 days that is well below 5%. So why do you think some financial institutions are reluctant to lend to affordable private schools?
So thank you, Surabhi. This is a very important question. What has happened in Pakistan is that in terms of the education sector, of course, as Roger said, very similar to Nigeria, the focus on the, public sector from the government has been really poor, so the private sector education has continued to grow. However, what has happened in terms of the financing needs is that it's been more like a aspect that's been missed out because of regulatory issues. The microfinance sector that has primarily started to show some interest in education finance had a capping of 500,000 rupees, which is close to $3,000 US, and they're not allowed even now by the regulator to lend to schools over $3,000, right? So that means that a very basic low-cost private school cadre is then available for the microfinance operators to lend to. On the other hand, the commercial banks, they find these schools, what we call the affordable or the middle cost private schools, to be too small and too risky a subset for them to be lending in. So they haven't really focused on these schools as well. So what has happened is that this has been a missing sort of a link in terms of the focus of the financial institutions. And because, as I said, partly because of regulation, the microfinance institutions could not go beyond that 500,000 rupee or $3,000 limit. And they were unable to really move into more impactful lending for schools where, like in other parts of the world, like in Africa, where one has seen that when you lend more specifically and higher amounts, that shows more impact. We've been really focusing on a very vulnerable level of low-cost private schools. And as you said, even then, because microfinance by nature, because of the strong relationship, has a lower portfolio at risk, the PAR hasn't really gone out of proportion. But in this microfinance sector overall, where portfolio at risk is seen to be 1 or 2% at 30 days, compared to that, the portfolio at risk for schools portfolio has been in the range of 4 to 5%. So certainly that's seen slightly more riskier. So that's been primarily the reason why there's been almost absolutely no player. And Taleem Finance Company, Taleem basically means education in Urdu, is the first initiative of its kind, which is now set up to only cater to middle and low-cost private schools as a non-banking finance company. But we will have, because we are not a microfinance institution, we would be able to then fund the needs at a higher level, up to even $30,000 if needed. And that's the objective. That's where we're trying to try and start meeting this gap in terms of the funding needs of these schools. So that's the first part. In terms of the quality of education, yes, because absolutely, the private schools do offer better education as compared to public schools. Again, just like Rogers mentioned in Nigeria. However, the private school sector requires much more funding to be able to invest in their quality. And that, again, has been a related issue because they've been unable to get access to reasonable required level of funds. They've not been able to go in that direction because, of course, the first level of focus is usually infrastructure. Once they have more sustainable revenues coming in and more sustainable businesses, they can then start focusing on that. So that's, again, a related issue that's created a lack of focus on quality as well.
So for financial institutions that are currently lending to affordable private schools, have you seen any of these financial institutions create incentives to ensure that schools are using financing to invest in education quality improvements as well as infrastructure? So as you mentioned earlier, we know that the first focus is always infrastructure. But in your experience in Pakistan, have you seen any financial institution create incentives for education quality improvements, or do they create incentives?
Again, Surabhi, it's been at a very limited level. So, in terms of microfinance, the previous organization where I worked for was a microfinance institution, and the only incentive one could create was, that one would subsidize the cost of some basic generic trainings that we had developed for these low-cost private schools. But then, to be honest, there wasn't really any real incentive that the schools could see for investing in quality. And one of the things that I think as a sector that needs to be now done is to have those partnerships, because what microfinance players tried to do, including the ones where I worked earlier, was to try and build that expertise in-house, and there would always be a limitation. So, what one is now looking at is that the kind of incentives that can be set up in the future should be where you partner as a financial institution with education quality providers whose forte is teacher training, capacity building, and right from the beginning, making some sort of a commitment with these schools as we provide them funds for infrastructure development or for working capital needs, that a small percentage, 2 or 3%, must be as part of a contractual commitment spent by them on their capacity building needs through partnerships that we plan doing with providers of education quality improvement. So that's a model that we are hoping to introduce. But in the past, there's been almost a negligible level of investment in especially the low and middle tier schools for quality. And there's been very little incentive that one can talk about that was created in Pakistan.
Okay, thank you so much, Kamran. And thank you, Rogers and Alex, once again for being a part of today's webinar. We now have approximately 15 minutes left, so we are going to move to the Q&A session. So we've got the first question from the audience. It's from Eric. Thank you, Eric, for submitting your question. So Eric's question is, what would you recommend as an EduFinance strategy for a country like DR Congo, where access to finance is limited? Scott, would you like to address this question?
Hi, Sarbi. Thank you very much. Yes. So thanks for the question, Eric. We operate in many countries that are difficult in terms of financial access and financial inclusion, and DRC is definitely one of those. One of the things that we've found best is to understand what the market potential is first with the financial institution. So doing market research to understand the specific needs of the borrowers and potential borrowers, and then working with that financial institution in an in-depth way to equip them to lend to their demographics that they're going to be lending to. So that in terms of equipping them, that's training loan officers, that's working on their product design. What are the kind of ways to mitigate the risk that they can enact that are specific to that market, and then how they can manage cash flows and how they can make sure that they're lending affordably and sustainably to their customers.
Thank you, Scott. We've received another question. This one's from Terence. Thank you, Terence. So I'm just going to read out the question. How does your institution currently, or how does your institution plan to create awareness and market its services specifically to schools in the next few years? Would one of the panelists like to share their thoughts on this? I'm happy for anybody to take this question.
Thank you so much. This is a very common question in Uganda because Opportunity Bank is doing extremely well with education, and they ask me how do you do it? One, the main thing, I don't know if someone who has asked it is in lending, but you need to understand your clients. Who are these clients you are targeting? Where are they? What do they really want? You understand their characteristics in terms of demography, location, business line, value chain. That will be in position to do your scouting very well. So what do we do when it comes to education finance? We were doing very well scouting. We have a lot of partners that are in education that we try to bring on board, like churches, like NGOs, because we know who are these clients are. These are the clients we want. This the ecosystem we talked about, the value chain we talked about in the first place. Then after that, we segment. What do these clients want? Different schools in different locations want different things. We've tried to penetrate schools using financial literacy. We do financial literacy. We teach the child how to save. How do you save? So by that, schools tend to appreciate that these are not after financing us, not after giving us only money, but they're after transforming our lives, after changing us. Obviously, in Opportunity Bank Uganda, our biggest shaker or the movers or something that has really helped us is education quality. they go ahead to teach schools on the professional way of managing schools, on the professional way of managing their business, on the professional of leadership. So these schools who work with us go and talk to other schools, go and communicate with other schools get attracted. We do not really invest a lot of money in marketing. We go to social media. No, we invest a lot of money in activities. Purposeful client relationship management. You can imagine our executive CEO, executive director, go down to these schools and visit them. You know how much that creates an impact. That's not done in any other bank. Other banks, they wait for you in their SCs. They don't come down to look for you. But when you go down and look for these schools, they feel appreciated, they feel valued, and they go and tell other schools, but by the way, this is where we should belong. And for us, that has helped us. We really get these schools when they are still staggering, when they're still at a lower, they're beginning, they don't have anything, we support them, we teach them, we empower them. So by that, we are creating what other banks cannot do. There's a lot of banks that really want to do buy-offs. A client is on a certain level, they don't buy off. So when it comes to reality, there's nothing. But if you're in lending, I don't know, someone who asked if they're in lending, but focus on these things. Try and do your scouting very well. Understand your clients, their demographic location, their problems. You've been positioned to attract more schools to your financial institution.
Thank you, Alex. Kamran or Rogers, would you like to add anything based on your experience in your respective organizations? Otherwise, we can... Okay,
yeah,
sorry, go ahead.
Just a quick comment, I guess, and then probably Rogers can add more. You know, for us, exactly as Alex said, the key is that it's got to be more field-based. You know, in our business, we don't look at fancy marketing campaigns. We're looking at a touch point strategy where, you know, a high touch point is something that works best. And even as we have started mobilizing schools, because we're a startup, the most, you know, sort of highest response that you get is when you call in schools for, you know, focus group discussions. You get 20, 25 school owners, and you introduce yourself to them, and you talk about what we're offering, what their needs are, and you immediately start getting so much information that, as Alex said, you know, having products that suit or meet their needs is important, and you only find that out when you have a high-touch strategy. So this is a business where you've got to be involved, you know, personally with those schools rather than having some sort of a remote marketing strategy. That's my, you know, 2 cents in this.
Okay, amazing. We have another question from Amos. Affordable private schools have challenges with quality of education. How do you demonstrate that the finance you provide improves education quality? Or do you have plans to begin linking financing to quality improvements?
So if you allow, Surabhi, I'll just make one quick comment on this, because this is exactly what I was talking about, that, you know, unless you make commitments that this is something that needs to be a priority agenda for all education finance practitioners. And what we are going to be experimenting is that we would be making contractual commitments with these schools that if, you know, whether it's as low as 2% or 3% of the borrowed amount, they've got to spend that on their capacity building through partners that have that forte and strength to provide quality trainings. And, you know, one can always work with those partners and improve and make those trainings even more impactful. But there's got to be, right from the forefront, this sort of a mindset that you cannot just be a funding agency. You fund and you come out and you feel and you assume that there'll be investment by these schools and other than infrastructure. So we believe at Taleem Finance that this is something that we need to start right from the word go. And hopefully in a year or so, we'll have a better story and an interesting story to tell you in terms of the impact that we have from this experiment.
Okay, so you're basically saying that we need to do another webinar next year.
Absolutely.
Yeah. Okay, so if I may come in to that question also, I would like to say that in the case of Nigeria, there is very strong competition amongst the private schools. And so the outcome of every external examination tells how well a school is doing and the quality they're throwing out. And so these proprietors of these schools are under constant pressure to improve on quality. So it's either that they are looking for loans to improve the quality of their facilities, or they are having standby working capital loans to ensure that conditions of service for teachers especially, are always held very high because, for example, if you don't pay salaries when they fall due, you lose quality teachers out of the place. So the financial institution, in doing a purpose analysis for the request, must be able to determine if the facility, the finance that you are providing helps in improving the quality of the education. Because if the quality goes down, at the next academic session, the enrollment figures will go down, and that puts a serious risk on repayment. So the financial institutions ensure that the funding that they provide is helping to improve the quality of education. I hope that answers Emo's question.
Yes, thank you so much, Rogers. That's really helpful. Unfortunately, we've reached the end time for our webinar today. I would like to point out that the session was recorded and we will email and post the deck on our website later today. Apologies for any questions that we could not answer during the webinar, but we'll try and send them to the relevant panelists and get back to you on these questions. I would again like to thank Rogers, Alex, and Kamran, and Scott as well, to take the time out of their busy schedules to contribute to this topic today. And thank you, everybody.
Thank you very much. It was a pleasure.